What is up, everybody? Scott Innocente here with AW4U, the Real Estate Group's Windsor real estate market updates. A couple months ago, we talked about inflation and how it impacts your wealth. Today, we're going to take it to a whole other level. Stay tuned. So one thing to understand when we discuss inflation is that not all inflation is equal. The Canadian government likes to talk about core inflation, which includes things like food, groceries, milk, eggs, bread, and cheese. But the problem with that is that you can't live in your milk, eggs, bread, or cheese. Therefore, we have to look at inflation separated into different categories. For instance, if you are looking to live in your parents' basement, watch Netflix, order Uber Eats, never travel, and never buy your own home, then core inflation is a great metric to look at. Your inflation rate of Netflix and things of the like doesn't really increase all that rapidly, and you can typically maintain your lifestyle pretty easily. If you find yourself in the middle class, however, you're probably not going to be looking at only core inflation. You also want to include things like housing prices, vacation prices, and other things that you want to do to maintain your middle class lifestyle. I think right now, middle class inflation, I would put at somewhere between 15 and 20%, which means that you need to earn 15 to 20% more than you did last year to maintain the same standard of living. So your bar, it becomes a lot higher when inflation is that high. And as we all know, most people don't get a 15 to 20% raise every year. Usually it's 2, 3, 4% a year if you're lucky. So you're typically losing buying power, and most of the middle class doesn't even know it. Let's take a third basket of persons that wants to live a luxurious lifestyle and a lifestyle of financial freedom. And let's look at the inflation index that they're gonna have to use. Typically, you gain financial freedom by owning assets, businesses, real estate, stocks, and other appreciating commodities. And in this case, the hurdle rate is going to be somewhere in between 25 to 35%. As we've seen real estate prices explode across Canada, if you are going to try to buy one of those assets now, they're 25 or 35% higher than they were before. So what's important to understand about this is don't get fooled by inflation metrics given by the government that are usually issued to justify oftentimes their incompetence. You need to understand the different baskets of inflation so that you can adjust accordingly. If you are looking to get out of the middle class and into the financially free class, your hurdle rate has now become 20% plus growth of your money, which is very hard to do in any sort of stock or low return savings account. You're gonna have to up your game and do other things. So I hope this helped clarify inflation. A lot of people are getting fooled by the numbers that are being posted, but just understand that those don't tell the whole story, and understand which category you're in and which category you want to be in. And then you're gonna have to understand the target rate to exceed the growth of money in the system so that you can actually get to the next level. So thank you for tuning in. I hope this helped, and we'll see you on the next one.